Let's take a look at problem 8-10. The City of South Pittsburgh maintains its books so as to prepare fund accounting statements, and it records worksheet adjustments in order to prepare government-wide statements. You are to prepare in journal form worksheet adjustments for each of the following situations. So let's tackle these one at a time. The first situation, deferred inflows of resources. Property taxes of $69,400 at the end of the previous fiscal year were recognized as property tax revenue in the current year's statement of revenues, expenditures, and change in fund balance. Okay, and now you see how you would make that journal entry. You would debit revenues - property taxes as your worksheet entry, and you would credit net position in the amount of $69,400. Let's look at the second situation. The city levied property taxes for the current fiscal year in the amount of $10 million. When making the entries, it was estimated that 2% of the taxes would not be collected. At year end, $600,000 of the taxes had not been collected. It was estimated that $320,000 of that amount would be collected during the 60-day period after the end of the fiscal year, and that $80,000 would be collected after that time. The city had recognized the maximum of property taxes allowed under modified accrual accounting. Okay, and now you see the entry that's required to handle number 2. It would include a debit to deferred inflows - property taxes in the amount of $80,000 and a credit to revenues property taxes in that same amount. So we're recognizing the $80,000 beyond the 60-day period. Number 3, in addition to the expenditures recognized under modified accrual accounting, the city computed that $175,000 should be accrued for compensated absences and charged to public safety. Okay, so you see what's required here, which is just taking advantage of accrual accounting. We've got a debit to public safety expense and a credit to the liability compensated absences payable. Number 5, in the statement of revenues, expenditures, and changes in fund balances, general fund transfer out includes $500,000 to a debt service fund, $600,000 to a special revenue fund, and $900,000 to an enterprise fund. Okay, and now you see how number 5 is handled. The total of the $500,000 and $600,000 comes to $1,000,001. We show that as transfers in, a debit, and a transfers out credit of $1,000,001.